hope everyone's had a brilliant Christmas. We are back today with another top trades of the week video. Today we are going to be going over an XAU USD sell position, a trade that we put out to the clients so they were able to profit from this as well, and take any notes that they needed to back their own analysis. So this is the position here, a lovely 30 pip stop loss to 130 pip take profit, giving us a lovely 3.7 to 1 RR. So in this video, I am going to go through my analysis and go through each step we went through to profit from this trade. Now, the first thing that we did was look at higher time frames and see where the market was going. So the direction of the market, what is the overall trend? So looking here, we obviously had the tap into demand. We had a great liquidity grab, price rallied up, tapped into supply, and then we started to see the price distribute. So we started to see clear bearish structure, giving us lower highs and lower lows. So the first thing we like to do and rule out before we place any trades in the market is ensure that the position we do place is the same as the overall trend of that market. So last week when this trade was placed, the market was in fact bearish. The overall trend was bearish. So that was our first piece of confluence. The current trend that was being set in the market was also bearish. So that was our second piece of confluence. And as our third piece of confluence, we had just recently tapped into a level of supply. So with those three pieces of confluence and confirmation, a short position into the gold market seemed realistic. What we needed to do then was find areas at which we could enter and look for potential areas where price could be reversing or the start of its next impulse could be going down. So as you can see here on the 1 hour time frame, we can see how the market was creating clear bearish structure, producing us with lower highs and lower lows. So let's mark out those areas for you now. So as you can see here, we have a high here, we have the lower high, we have a low here, and then we have the lower low. So it's clear bearish structure. So that led us to, this next retracement coming up and the potential for the impulse coming down. So once we have marked out our areas, we then like to use tools and other indicators that can give us more confirmation and a better bias on this pair. So using the Fibonacci, we did mark out the start of the impulse to the end of the impulse, and we like to see how price reacted to these ratios. Now we can see how the price reacted well to the 38.2 here, and then come into the more recent swing, the one that we used to actually enter in on this trade. We can see how this pair reacted perfectly to the 61.8, which is in fact a golden ratio of ours. So now moving down to the lower time frames, the 15-minute, we can see where we entered, and I can give you a more in-depth look at to why we entered where we did. So you can see here we did actually capitalize on a position the day before. And this was using the same method that we used for this entry. The trade that we capitalized on didn't have a greater RR, hence why we are not going over that one, and we are going over the one we are going over. You can see how we have marked the start of the impulse here and the end of the impulse here with our Fibonacci retracement, which then gave us our three golden ratios, the 61.8, the 50, and the 38.2. Now what we did was waited patiently for price to drive up and tap into one of these areas and look for that key reaction and clear indication of the end of a retracement and the start of the impulse. Now, as you can see, price continued to break through the 38.2 as well as the 50, but it failed to break above the 61.8. Now that built confidence in sellers and people looking to capitalize on a trade going down. And it was in fact at this point where we entered. Now, reason being, we had the tap here, we had price come down, and then price come back up to retest this area, and then we saw a lovely move down. So that for me was great, and that's why I entered in on that position. We saw the tap and then the retest, and then I thought we were going to see a lovely bleed out in the market, but that didn't come in till later on in the day. Now when we came to place our position here, I wanted to ensure that our stop loss was set above the 78.6 because I knew that, in terms of the Fibonacci, price could actually react off this point. So I wanted to ensure that our stop loss was set just above that, giving our trade enough room to breathe. Obviously, when placing this trade, I ensured that our RR was correct and that we were using the right safety measures. Now, as you can see, implementing those things into this trade is what saved our position and what gave us a lovely return on this position. Now, looking at the 5 minute, you can see that I've drawn out some lines with some boxes, and I'm going to go through why I've done that. So after we saw price push up to this point and then start producing clear bearish structure, that was a great indication that now this trade is going in the right direction. I did trail my stop loss, but I didn't move my stop loss until areas were broken and previous structural lows and highs were broken as well. Now that is why we have these lines in place. So obviously this here is a structural low. This is also a structural low, and this is also a structural low. So I have drawn lines across. So when price met these points, as soon as price broke below these points, it gave me more confidence that this market was going to continue to produce this bearish structure. Now, once price had broken this low here, I did actually move my stop loss to entry as we had this high protecting our position. On top of that, we had also had a break in these structural lows. You can see more clearly here on the 15 minute, the lows that we have highlighted. Now, going back to my point of this low here, once we had a break in this low, that filled me with even more confidence and allowed me to leave my trade to run, as once price broke below this point, it was confirmation of a break in structure. Because if you look here, you can see this is the start of bullish structure. So we've got a low, a higher low, we have a high, and we have a higher high. So in order for this bullish structure to continue, it would have needed to set a higher low from this one, and then a higher high from this one. So somewhere up here. But because the price broke below this low, this was confirmation that this structure was no longer valid and this trend was no longer valid. And it confirmed to us that the bears were in control of the market. So zooming back into this market, now looking at it on the 1 minute time frame, what you could have done if you had placed this position was, as soon as we had a break from this point, moved your stop loss to entry, making your trade completely risk-free. And then as soon as the market was creating new lower highs on the 1 minute time frame, you could have trailed your stop loss to the previous high that it produced. So for example, when this high was produced, you could have moved your stop loss to this high. When this high was produced, you could have moved your stop loss to this high. When this high was produced, you could have moved your stop loss to this high. And what this does is this just protects your position and guarantees you with some profit. It's called trailing your stop loss. And it is a brilliant way to maximize profits in any position, but keeping that risk management there at all times. So overall, this trade lasted for around 5 hours, but the swing itself lasted no longer than 3 hours. So within 3 hours, we had made 7% returns and 120 pips. And I'll put that on screen now. So just to summarize on this trade, what we did was we looked at the overall trend on the higher time frames, the 1 day and the 1 week. We saw that it was bearish. So we were instantly looking at placing sell positions on this market. Then we looked at the lower time frames, so the 4 and 1 hour, and we saw that the price looked like it was coming to the end of its retest and the start of its next impulse down, which was brilliant. That gave us more confluence. So what we did was go to lower time frames, and we used tools like the Fibonacci to give us that added confirmation that we needed and the precise entry as well that we wanted. Then we used good risk management, so risking no more than 2% on our trade, as well as good RR, setting our stop loss above the 78.6 and giving ourselves a realistic target for our take profit. Then once we placed our position, we let our trade run, and once our trade was in profit, we moved our stop loss accordingly. Again, this swing took no longer than 3 hours, and we managed to capitalize a lovely 120 pips and a 7% return. Now, if you feel as though the explanation was quite brief and you were struggling to understand where I was coming from when I was explaining this, then please drop a comment below and I'll be sure to get back to you. Alternatively, you can join our Learn and Lounge group chat. It is completely free, and we went through a full rundown on this trade in there as well. Throughout this video, I will try and provide you guys with as much evidence and as much analysis to back this trade, as well as the profit sheets and the profits that we produced from this trade as well. Now, if you guys did enjoy the video, please leave it a like and don't forget to subscribe so you don't miss any content that me and James produce throughout the coming year. Now, with that being said, I just want to say thanks for watching and we'll see you guys in the next trade of the week.